Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate filings, and today we're diving into Vanguard Index Fund's semi-annual shareholder report. It's a deep dive into how some of your favorite index funds are performing, and let me tell you, there are some really interesting numbers in here, especially when it comes to their investment portfolios. Make sure you're subscribed if you want to keep getting these insights directly from the source. And if you want to chat about these numbers or ask questions, join our Discord community linked in the description below. So this report covers the period from January 1, 2025 to June 30, 2025. It's packed with details about different Vanguard funds like the 500 Index Fund, the Value Index Fund, and the Growth Index Fund, the Value Index Fund, the Value Index Fund, and the Growth Index Fund across various share classes, investor shares, ETF shares, Admiral shares, and institutional select shares. We're going to skip over the boring legal stuff and jump straight into what matters most, the financial performance and the fund's holdings. Let's start with the Vanguard 500 Index Fund Investor Shares, a fund that aims to track the performance of the S&P 500 index. It's a pretty straightforward fund and usually a good bellwether for the stock market. As of June 30, 2025, this fund had a massive $1,490,277,000,000 in net assets. That's a huge amount of money, showing just how popular this fund is. Now let's look at where this money is invested. The biggest chunk, 33.1%, is in information technology stocks. That tells you a lot about where the market's focus is. Consumer discretionary comes in second at 10.4%, followed by financials at 13.9% and communication services at 9.8%. You can see the fund is heavily weighted towards these sectors, which is typical for an S&P 500 index fund. Diving into the actual holdings, the schedule of investments for the 500 Index Fund gives us a clear picture. At the top of the list, we see giants like Nvidia Corp, with a market value of almost $109 billion, Microsoft Corp at over $104 billion, and Apple Inc. with nearly $87 billion. These also Corp at over 100, a massive portion of the fund's value, showcasing the concentration in the largest tech stocks. The top holdings also include Amazon.com Inc. with almost $59 billion and Alphabet Inc., Class A and Class C also with substantial values. It's clear that the performance of these few mega cap tech companies heavily influences the fund's overall returns. The fund's total common stock investments alone are valued at over $1,482,000,000,000. This signifies significant unrealized gains, meaning the fund has done very well over time. Looking at the statement of operations for the 6 months ended June 30, 2025, the fund generated over $9 billion in investment income, primarily from dividends. Expenses were around $214 million. The net investment income was nearly $9 billion. The real story, though, is in the gains. The fund realized over $55 billion in net gains from selling investment securities, futures contracts, and swap contracts. And the change in unrealized appreciation was another massive $25 billion. Together, this led to a net increase in net assets from operations of over $89 billion. That's an incredible profit. For investor shares, the net asset value per share reached $572.69. That's a healthy increase. The investor shares class alone had net assets of nearly $2.9 billion at the end of the period. The total return for investor shares over the 6 months was 6.13%, which is pretty solid, especially when you consider this is a passive index fund. And the cost to hold onto these shares is incredibly low, just 0.14% of average net assets. That's why index funds are so popular. Now let's quickly check the ETF shares. Vanguard 500 Index Fund ETF shares. As expected, the numbers are very similar, with a net asset value of over $1,490,000,000 and a portfolio composition that mirrors the investor shares. The costs are even lower for ETF shares, just $2 for a $10,000 investment or 0.03%. That's practically free. The net asset value per share for ETF shares was $568.21, and the expense ratio here is incredibly low, 0.03%. This is what makes ETFs so attractive for cost-conscious investors. Now for Admiral shares, another share class of the 500 Index Fund. Again, we see the same massive net assets of $1,490,000,000 and the same portfolio composition. Costs for Admiral shares are just $2 for a $10,000 investment or 0.04%. Very competitive. The net asset value per share for Admiral shares is $572.58, very close to the investor shares. And finally, institutional select shares. The net assets here are the same at $1,490 billion. For institutional investors, the costs are even lower, just $1 for a $10,000 investment or 0.01%. This highlights the economies of scale at play for very large investors. Switching gears to the value index fund, the statement of operations shows robust performance. For the 6 months ended June 30, 2025, the fund's realized net gain on investments was over $4 billion, and the change in unrealized appreciation added another over $3 billion. This fund, focused on value stocks, also saw significant gains. The net assets for the value index fund are $195,517 million. The sector breakdown here is quite different from the 500 index fund. Financials take the largest slice at 22% and healthcare at 13.9%. Notice the much smaller allocation to information technology compared to the 500 index fund. Looking at the holdings for the value index fund, we see companies like Walmart Inc. valued at almost $3.8 billion, Home Depot Inc. at over $3.2 billion, and Walt Disney Co. at nearly $2 billion. It's a list of established, often mature companies fitting the value investing style. For the ETF shares of the value index fund, the net assets are the same at $19.5 billion, and the expense ratios are remarkably low, starting at just 0.04%. The net asset value per share for ETF shares is 175 cents. Now let's look at the Vanguard Growth Index Fund investor shares. This fund has net assets of $311,870 million. Unsurprisingly, technology dominates this portfolio, making up a whopping 60.4% of net assets. Consumer discretionary comes in next at 18.8%, followed by industrials at 8.9%. This heavy concentration in tech is a defining characteristic of growth funds. The top holdings really drive the performance here. Microsoft Corp is valued at nearly $37 billion, Nvidia Corp at over $36 billion, and Apple Inc. at almost $30.5 billion. These three alone represent a massive portion of the fund's holdings. The total common stock investments here also show strong growth, with costs at over $140 billion compared to a market value of over $311 billion. That's a huge unrealized gain. The expense ratio for investor shares is 0.17%, for ETF shares it's 0.04%, and for Admiral shares it's 0.05%. These are all very low expenses for managing such large portfolios, a testament to Vanguard's business model. Looking at the statement of changes in net assets for the Growth Index Fund, the net increase from operations for the 6 months was over $21 billion. That's a lot of growth. The total return for investor shares over the 6 months was 7.05%. ETF shares saw a slightly higher 7.112% return. Finally, let's touch on the Vanguard Large Cap Index Fund. This fund aims to track the performance of a broad large cap stock index. It has net assets of $61,238 million. The sector allocation is similar to the 500 index fund, with information technology leading at 38.8%, then consumer discretionary at 14.6%, and industrials at 11.6%. The schedule of investments shows holdings like Microsoft Corp, valued at over $4.3 billion, Nvidia Corp at nearly $4.3 billion, and Apple Inc. at over $3.5 billion. Again, these top tech companies are major players. Now, shifting focus for a moment to leadership, in February 2025, shareholders voted to elect trustees. Looking at the results, all the nominees received an overwhelming number of votes for, with trillions of dollars in net asset value represented. For example, Tara Bunch received over 3 trillion votes for, with only about 52 billion votes withheld. This shows strong shareholder confidence in the current leadership and the direction of the funds. The report also details the approval of advisory arrangements. For the 500 Index Fund, the Board of Trustees renewed the investment advisory arrangement with the Vanguard Group. They evaluated the investment staff, the management process, and performance, concluding that the current arrangement was in the best interest of shareholders. They noted Vanguard funds The board specifically mentioned considering short and long-term performance, and they were satisfied, leading to the continuation of these agreements. And the cost factor is consistently highlighted as a strength. The report states that the fund's expense ratio was below the average for similar funds, and that advisory expenses were also below the peer group average. This focus on minimizing costs for investors is a key part of Vanguard's philosophy. The board also concluded that Vanguard's structure ensures that as the funds grow, the cost to shareholders will continue to decline. This is a significant advantage for investors. Across all these funds, the expense ratios are incredibly low. For the 500 index fund investor shares, it's 0 and even lower 0.01%. For ETF shares, it's an astonishing 0 throat zeros are an even lower 0.01%. These numbers speak volumes about Vanguard's commitment to keeping costs down. Looking at all this information, the story is pretty clear. Vanguard's index funds are performing as expected, tracking their benchmarks closely and delivering solid returns. The financials show strong growth in their assets and realized and unrealized gains, reflecting the performance of the underlying markets, particularly in technology. The incredibly low expense ratios remain a major selling point and a significant advantage for investor trustees. Based on performance and cost reinforces the stability and effectiveness of Vanguard's management approach. The biggest risk, as always with index funds, is market volatility, especially given the heavy concentration in tech stocks. If the tech sector falters, these funds will feel it. However, that concentration also reflects the current market landscape. On the whole, these reports paint a picture of consistent low-cost investment management delivering market returns. So what's my take? Vanguard continues to offer a highly effective and incredibly affordable way to invest in broad market indexes. Their commitment to low cost and shareholder value remains a strong point. For investors seeking broad market exposure and prioritizing low fees, these funds continue to be a solid choice. Alright, that's our breakdown of Vanguard's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.